So good evening everyone and welcome to today's session of After Hours with William O'Neill India, December 07, 2022. I hope everyone's doing well. Before we go ahead, I would like to give a small disclaimer that any stock, any security that we might discuss in today's session should not be considered as a buy or sell recommendation, and we're just doing it for education purposes. So considering global cues and even your US market indices ending on a negative spree last night as well. So there had to be some kind of pressure. Plus, there was this RBI meeting where rate hike was likely. So overall, markets were under pressure, and as you can see, had a muted positive opening, then went higher to around 18,660, and then continued to trend lower for the remaining part of the trading session. Post the announcement, there was a little bit of volatility was there, and after that you could see it was very flattish along the way, and at the end of the day it went below the 18,540 mark, and at the end closed near the 18,550 levels. So overall this has been the second or the third selling day in the last few days, but there's been no distribution day now. So we'll be discussing more on that in the coming slides. So as I was talking about distribution day, you could see in the last couple of days, Nifty declined by more than 2%. On Friday as well, it declined by more than 2%. But as you all know, we've been following our mailers, the morning mailers, the evening mailers. The distribution day count is still at 1. Just sorry. Sorry. So distribution day count is still at 1. Why? Because in all these days, if you look at it, the volume bar for today is not updated yet. So it was somewhere around here. So you can see for today, for last session, the distribution day counts are counted on volumes higher than the previous day. Not above average volume, not anything else, but volume higher than the previous day. So in all these three selling sessions, the volumes on Nifty was never higher than the previous day. That's why the distribution day count is still at 1. Markets continue to remain in confirmed uptrend. However, you can see with some global market selling in your US equities, your European equities, you can see the Indian markets also coming down a little bit. But comparatively to the global peers in terms of the index, just the index as a whole, we're much better placed in terms of well above the 2150 DMA. Going forward, probably around the 18,550 levels, we are there. Probably you can see some kind of support around the 450 to 350 levels, and somewhere around your 21 DMA as well. So let's see how market behaves, and probably going forward, can your broader market such as your small cap and mid cap participate in the rally as well. So talking about top gainers and losers for the day, the top gainer was your Hindustan Uniliver that gained around 2%, BPCL similarly around 2%, Asian Paints at 1.91, L&T at 1.5, Axis Bank at 0.9. On the loser front, you can see SBI Life at 2%, NTPC at 2%, Bajaj Finserv at 1.8, Tata Motors at 1.7, and Bajaj Auto at 1.6. Talking about the sectors, as you can see, only 2 sectors ended on a positive note. That was your Nifty FMCG and your PSU Bank. You could see heavy selling in some of the sectors such as your Nifty Realty, your Nifty Metal, your Nifty IT, and your Nifty Auto. Talking about on the key news front, you can see crude oil slipped below 80 per barrel for the first time since January. The China's export in November was down 8.7% YY, where imports were down 10.6% YY, mainly on account of COVID-19, your lockdown restrictions. And in-bank hiked repo benchmark rate on all loans by 35 bips to 6.25%. HDFC Life and LIC's new business premium grew around 41.2% YOY and 51% YOY in November, where SBI Life's new business premium was down 32% YOY. Talking about the key event for the day, that was the RBI meeting. So RBI MPC committee hiked interest rates by 35 bips to 6.25%. The MPC decided to remain focused on withdrawal of accommodation to ensure that inflation remains within the target while supporting growth. And going forward for the next 1 year, RBI is not seeing your inflation to come down to below 4% to even 1.5 years as well. Crude oil prices are assumed to at $100 per barrel, so they're seeing crude oil probably to average it around for the year to go back to around 100, maybe higher as well. This project and inflation is projected at 6.7% for FY23. The real GDP growth for FY23 is projected at 6.8%, with Q3 at 4.4 and Q4 at 4.2. Talking about our chart of the day. The chart of the day for us is Mahindra Holiday and Resorts. And before we discuss, I mean, it's again a disclaimer that it's not a buy or sell recommendation at the moment. We're just doing it for educational purpose. So, talking about the company, your Mahindra Resorts take membership money upfront and charges annual subscription fee, and this probably maintains the consistency in cash flows. Overall, you can see what's working well for the hotel industry, and similarly for Mahindra Holidays and Resorts is that there's a changing trend due to rising population of millennials and Generation Z. The company is creating brand awareness and ability to pay higher for leisure stay has significantly improved. Priorly, if you look at some years back, people were not ready to probably shell out that extra money. But as your incomes, as the disposable income is increasing, people are ready to spend out more on their leisure. Overall, in terms of the balance sheet and the growth drivers for the company, has a zero debt balance sheet and funds and capex from customer advance subscription money. So it gets the money in advance. From that only it works on its properties, and that is these are the positives for the company. Now coming on the William O'Neill and the technical front, if you look at it, earnings is been growing well. There are a few hiccups in a quarter or two, but if you look at the number of funds, you can see institutional funds, institutional holding for the stock improving as well. Overall, the ratings have been stable and improving. Similarly, I mean, if you could see, the stock is forming a cup base at the moment, and in the last cup as well, you can see the decline was on lower volumes, so there was no distribution. And similarly, in this cup as well, you can see the decline on lower volumes. Probably in the last cup, you could see big volume bars coming on the right hand side of the cup. Here also some big volumes have been forming up. So let's see, the stock is still 8% to pivot. RS rating at the moment 69 is fair, but going forward to that pivot part, if volumes comes in and you can see big price moves coming in, the RS line will also further trend higher, and probably the ratings would improve as well. And in terms of the RS rating, overall, all the ratings remain really good for the stock. And probably if markets continue to remain in momentum and the stock breaks out on above average volume, can be a good stock to watch out for at that moment. So probably that's it from my side, and thank you, and stay tuned to the space of After Hours at 4:30 p.m. and pre-bell at 8:45 a.m.